everyone. Welcome to this week's webinar on planning and budgeting with inconsistent income, which I know all of you freelancers are dealing with. And even those of you who are officials and have transcript income, there's still some fluctuation there and some money movement that needs to be managed. So I'm excited to be with you again tonight to talk about budgeting and planning around this inconsistent income. So let me pull up the presentation for today and we'll dive right in. And as I'm posting or pulling that up, feel free to leave any questions in the live comments. I can see those as we're going through the presentation today, and I'll do my best to get those answered. All right, budgeting with inconsistent income. Why this is important for core reporters is I see that the income variation can be pretty wide from anywhere from bad months where even $0 of income to $3,000 of income, all the way up to $30,000+ months that I've heard core reporters having. And so having this fluctuation makes it really hard to be able to save consistently toward your financial plan and feel like you're getting into a rhythm and a flow with your saving and your financial plan. It always just feels like money's all over the place. I know a lot of core reporters just transfer money as they need it from their business accounts to their personal accounts. So the goal here is, yes, how do we budget and plan around variable income? But the other part of that is how do we just get a little bit less anxiety around your finances and your cash flow so that you're bringing in consistent income to your personal side and can work with that and manage it. So we want to make sure we have a good strategy in place, and really you don't have to feel the ebbs and flows of the business on the personal side. So the number one thing that we need to do to help with this is you need to build your own steady paycheck. And what I mean by this is you have your business accounts and your personal accounts, and we need to set up a steady stream of income that's coming from the business and the personal that isn't going to change regardless of what's going on the business side. So you almost want to turn yourself into an employee of your business where you don't really feel those ebbs and flows. You know what your pay is going to be every single month. And that's what we can start to use to build your financial plan. On top of that, we need to have like a buffer for your business, right? What's that wiggle room that we can work with where even when we do have a couple bad months in a row, or you get sick or injured and can't work for a period of time, that you still have that income coming in the door and you don't feel that on the personal side. So it's pretty easy to get this set up. So hopefully you guys will be able to execute on this after the presentation today, or at least start to get an idea and put something together. And again, it's going to give you a bit more peace of mind going forward, having that stability in your cash flows. So one of the first things that you could do, you don't have to do, is setting up an S-corp. We've talked about why an S-corp is beneficial and having that piece of your plan from a tax savings standpoint. But if you do set up an S-corp, one of the pieces that you need to have is your base W-2 salary. So what you're going to pay yourself as a W-2 salary. Now, I use salary interchangeably as salary meaning what you're going to give yourself on a monthly basis, and then also salary as far as W-2, what's actually going into the payroll company's reports, and what are you actually sending yourself as a paycheck. So I'll try and differentiate it in today's presentation. W-2 salary means money that's going into the payroll company and then coming out as a paycheck to you. And then just your regular salary, or I'll try and just say monthly cash flow, is just your total take home that's going from the business into the personal accounts. So step one is we need to figure out what we can pay ourselves as a W-2 salary. Now, remember, the goal here is to make that number as small as possible without getting in trouble with the IRS. And we also want to make sure there's enough wiggle room where you can do decent contributions to your retirement plan. The next step of that is doing regular owner distributions where you're just transferring money from your business account to your personal account. You don't have to go through payroll systems or anything like that. It's just auto transfers from one account to the other. So we want these two numbers combined to be the amount that you need on a monthly basis. So let's say, for example, you need $10,000 per month coming in the door. Maybe the way that you pay yourself after tax withholdings from this W-2 salary, your bank account gets hit with 3,500 from your like paycheck that you're paying yourself. So that means that we need the other $6,500 that you need for your monthly income to come from your business account. So you could just set up on the first of the month that 6,500 goes to your business, to your personal. So now between your paycheck that you're getting, your W-2 salary, and your transfers, you're getting that $10,000 a month to your personal accounts. Once you get that $10,000 a month to your personal accounts, then now you can figure out what to do with that, right? Maybe it costs you $8,000 to run your life, and $2,000 goes toward your financial plan every month. And so that's a consistent savings plan, consistent spending plan that you can follow going forwards, not worrying about the ebbs and flows of the business anymore. Having an S-corp, as we've talked about, comes with a big tax benefit. The main one being that you get to save on self-employment taxes. So just as a quick refresher, anything that's the W-2 salary has to pay an extra 15%, we'll call it, just using round numbers, in taxes from what you do as an owner distribution. So that's why we want to do a little bit less, or hopefully a lot less, to the W-2 salary, because we don't want to pay any more self-employment taxes than we have to. So how do we actually determine what this base salary is? There's a couple different things to look at or different approaches to go off this. So number one, you can calculate what is the minimum amount that you need of income every single month, and then maybe add like a 10 to 15% buffer for random one-off expenses that come up and see what that number gets you. You want to include your fixed costs as well, your mortgage, utilities, everything like that, all baked in to help you with this number. And then from there, the last step is setting that W-2 salary. And then you can even run like a paycheck and see, okay, what's the net income that I'm going to walk away from this? And then you can add that monthly transfers on top of that. That's one way to do this, is thinking of it as more of what do I need on the personal side and calculating it that way. Another way to do it is looking at what you actually made last year, what you're expecting to make this year, and then using that to figure out a baseline number to start with. So maybe your business netted after expenses, let's just say $180,000. So that's 15 grand a month that you can pay yourself every month based off of that. If we want to play it a little bit safe, maybe you say, okay, to start with, I'm going to pay myself $12,000 a month. And then let's just start from there and see how it goes. And then we can reevaluate in the future. So that's the alternative, is actually just using past results from your business and future projections to say, this is just the number I'm going to pay myself. I don't really care what my expenses are. Usually in that scenario, you're getting paid more than what your expenses are on the personal side. So you'll just be able to save the difference and work off of that. So making sure that you have a business account set up is a huge priority here. It doesn't even have to be like a business savings account or business checking account with your bank. It just has to be a separate account that you only use for your business. It doesn't actually have to have business account in the name or be a business account set up through the bank. It just has to be only used for business expenses. And as long as you're separating it like that, then mission accomplished with that. So having that business checking account is really going to be where the fluctuation happens in this strategy. So we need to figure out what's the starting balance that we want to have in that checking account. And then you're going to start doing this strategy and paying yourself every single month, and then see what happens to that business account, right? If it starts going down and it gets below a certain threshold, maybe you started at 50K, and if it hits 35, you're a little worried and you need to actually lower your salary and you overestimated what is possible. Or maybe the opposite happens. You start at 50,000, 6 months from now, you're at 80,000. Okay, now we know that you could either just give yourself a bonus or you can increase your salary and give yourself a raise. That's always fun. Give yourself a little raise. So the business account, that's like your thermometer of where are we at, and just keeping track of what's possible and what changes we need to make. But the reality is, or the goal, I guess I could say, is that you want that number to only go up. You want to start that salary low, where it's only something you're increasing. Because if you do have to go up and down and increase it and lower it, that kind of defeats this whole purpose of the variable income. So ideally, you want to have a number that you start with that's low, and then you're just giving yourself raises or bonuses as you can in the future. You're never going to have to actually back it down. So we'd rather start on the low side to help with that variable income issue. So what should we do here as far as the business checking account? I would say the target should be 6 to 12 months of expenses. And when I say expenses here, think of it as like paying for all the expenses of my business plus paying myself my salary. So if I'm paying myself 10 grand a month, like I mentioned, and my business expenses are another 2 grand a month, if I'm not working or something happens, I want to still be able to pay that 12 grand a month for the next 6 to 12 months without any issue. So that's a decent amount that you need sitting in cash. A lot of times it ends up being 50 to $100,000 that we need sitting in cash. This is a lot higher than I would recommend for other clients. This is really specific to the court reporting industry because it is so easy to be out of work. We need to have a little bit extra sitting in cash to help this. Once we have this number, like I said, then that is our starting point. Let's say that starting point is 50 grand that you're going to work with. Then maybe you say, okay, every time that I hit 65 grand in this account, then I'm going to take 10 grand out and give myself a bonus. So you hit 65, you take 10 grand out, you go back down to 55,000, and then you start from there and see what happens again. So you can do that as a bonus strategy if you don't want to pay yourself a higher salary. And then when you get that bonus, then you get to pick what you want to do with it, right? So I have on here personal savings. Maybe you need to build up your personal emergency fund, or you have a savings goal that you're trying to accomplish, a vacation, something like that. Retirement, it could be another option. Maybe this is how you fund your retirement plan, is whenever you have surplus, you can commit it toward this. Or lastly, maybe you just want to go spend it on something. You've worked really hard, you hit this milestone, and you can take this 5, 10,000, whatever the number is, and go spend it and have some fun and get back on track next time. Having this strategy, it really just helps with this consistency and never feeling really is the downsides of those slow months in the business. So, how do we manage this on an ongoing basis? I think weekly you need to just keep an eye on those business accounts as things are moving around. Make sure everything always looks good and we're keeping track on what's going on a quarterly basis. I would check in with yourself and your business and say, okay, like how much extra could I give myself a raise if I wanted to and still never have an issue of running out of money in the business account? So you can just reassess that on a quarterly basis and see what's possible. During the slow months, it's important that you stay disciplined here. Ideally, you're never transferring money from your business to your personal account at will. You're either doing it because it's part of your monthly salary, or you're doing it because it's a bonus and you hit that higher threshold. But it's never like things are slow, X, Y, and Z came up and I need some extra money. We want this to be a consistent amount and you're never just pulling from the business account whenever you want to. We want to keep it organized. During the busy months, it's important that we still celebrate those wins. We also don't want the problem of building just too much cash because you don't know what to do with it. And so when you do have those good months and you have extra money that we can bonus out to yourself and use toward your financial plan, having an idea of what that place is that I'm going to put that money once I get it could be helpful to stay organized on this as well. So as far as next steps, set up the S-corp, of course, if you haven't. General baseline is if you're netting 100,000 or more for your business, you should look at setting up that S-corp status. Calculate what you want the base salary. Remember that base salary, I mean your total monthly pay. And then also figure out, okay, what of that is going to be W-2 income? What's going to be a transfer from the business accounts? Open those business accounts if you haven't done it yet and set up those automatic transfers so that it's good to go. You can really treat yourself like an employee if you want to. Even something I do personally is I like to pay myself on like the 10th and the 25th, so 15 days apart on either side, and I just get 2 paychecks a month just like I was a normal employee. So you can set it up however you want like that as well. If you have any personal questions on this or questions about your unique situation, or you want to schedule a consultation to talk about getting this set up for yourself and getting help with the financial planning and keeping all this stuff organized, definitely reach out to me. My email is brandon@traction-wealth.com. I'll be happy to talk more about your individual situation and see how we can help. Other than that's everything that I had for today. Again, let me know if you have any questions in the comments, but otherwise, I'll see you all next week.